Hello everyone! Today we're going to talk about Bitcoin, which is trading below 112,000 and closer to 111, specifically at 111,254. I'll say right away that today I plan to do a live stream where I'll answer your questions about altcoins. We will look at the targets for growth and decline, which will be on the daily, weekly, and monthly time frames, possibly the 3-day time frame as well. So join the live stream. I'll share the link in the Telegram channel. But for now, let's start with the monthly Bitcoin time frame, where, as usual, we have a reversal candle. That is the August candle, which set a new high. Let's take a closer look at it like this. It set a new high, closed with a solid red body, which suggests a potential continuation downward. To where? Right here, to the base of the July candle, at the very least. Its base is the opening price of 107,146. This month, our minimum was 107,255. Well, formally speaking, we can say that we reached this base, but somehow it doesn't look convincing, right, this move. Nevertheless, yes, we should keep in mind that as long as this candle hasn't been engulfed, from the perspective of monthly candles, the priority is downward. In addition, we have a double divergence here. That's all, there's nothing more to add. Accordingly, since we moved to this level, around 107,000, the next level is right here, the January close of the green candle. It closed at 102 South 429, 102 429. And so, accordingly, this is the nearest target and the most important support, because after that, as you can see, we went down quite sharply, then broke through this support, and the retest of it in the area of $102,500 will determine the further direction of the market from the perspective of the monthly time frame. That is, if we close below, there is a high probability that the movement will continue down to the $94,000 level, and potentially even to the $82,000 level. Let's look at the weekly candles. On the weekly candles, these 3 weeks of decline have engulfed this one big week of growth, thereby reversing the market. In addition, we also had candles that updated the all-time high. Here is one, and here is the second, both of which closed with a red body. This also supports the case for a decline. What would change if we want to see growth? Or rather, under what circumstances can we talk about a trend reversal to the upside on the weekly time frame? Provided that we engulf this red candle from last week. Well, in this case, it's orange. For that, we need to see the weekly close above $113,494. So far, as we can see, the price is clearly not at those levels. Accordingly, if we consider a further move down, this support zone becomes the target level. Here we had the end of some local decline, right? And this is around $101,000. Well, again, there's also this level. It's still the same 104.5 that we saw on the monthly candles. Pay attention to... Let's go back. Well, let's take a look here first, and then we'll go back to the monthly chart. Look, the 50-week moving average, once we touched it, twice we touched it, we didn't touch it again. So we're hitting the 50-week moving average, which means that each new approach to the 50-week average carries the risk of a drop to the 100-week average, which right now, for example, is around $76,000. You need to take this into account. In other words, the monthly candles suggest a decline at least to the area of $104,500. The weekly candles also point to a drop to around $104,500 or $101,000. That's it, there's nothing more to add. Let's look at the daily candles. What do we have here? On the daily candles, we also have a short setup. I wish I could say that things look different, but nevertheless, that's how it is. Look, we touch the 5-day moving average, bounce off, set a new high, then there's a bearish engulfing, we break through the 5-day average, retest it from below with a false breakout upwards. Then we break through the 100-day moving average, retest it from below with a false breakout upwards, and again move down, step back for a bit, and retest again, but not a single candle in 1, 2, 3, 4 days closed above the 100-day average. So this is a classic pattern where there is a level, it gets broken, tested, well, in this case broken downward, tested from below, and then the movement continues downward. If we're looking downward, where to exactly? Here, without any markings, without anything, right? Well, here we had a key resistance level at the time, right? $111,743. Only if we close above this level and definitely above the 100-day moving average, not the 50, but the 100-day, then in that case, we can expect a retest of the 5-day moving average around $115,000 and maybe the closing of the gap on the Chicago Mercantile Exchange around $116,000. but only on the condition that we close above this green candle from May 22nd by the body and above the 100-day moving average. This means we need to close above $112,000 on the daily time frame. Now let's consider where we might go down to if it does go down, since for now the monthly, weekly, and daily candles are all indicating a decline. Well, let's say the nearest support level. So which one? Well, probably just some very local one that works for me. $106,000. Why? Because that's roughly the midpoint between the 100-day and 200-day moving averages. And it's not always the case that after breaking through one moving average, we immediately go straight to the next one. Sometimes it happens like this. Look, we tested the 50-day moving average, then broke through it, didn't reach the 100-day, and went back up again, right? Accordingly, the same situation could happen here. We might not reach the 200-day moving average, maybe we'll get to, say, $106,000, and then go back to retest the 50-day moving average, for example. I'm just throwing out some scenarios here about where the market might go and what possible paths it could take. But overall, at the very least, yes, according to the daily candles, we're looking at the area around $106,000. And potentially, here we had a turning point. Well, not a reversal, but a pause. A period of consolidation with several false breakouts downward. Because after that, there was significant growth with new all-time highs. That's around the $103,000 level. Notice that the 200-day moving average is roughly here. That's the simple story. Notice I didn't use any markings at all that might look very intimidating to someone who's not prepared. Now let's take a look at what my markings show. Well, first of all, besides the fact that we've broken through the 50-day and 100-day moving averages, we also have some kind of upward channel. Notice that we've broken through its lower boundary as well, and tested it too. This channel was drawn ages ago, many months back, and yet we paused exactly at this boundary, and that's the one we tested. If we turn off, say, all the moving averages, let's go ahead and disable all the indicators, then take a look. What do we get? Well, we're testing the boundary, but at the same time we can see that there's a white, very important support level that hasn't been broken yet. And that raises some questions. Why? Because if we look at this candlestick structure starting from September 1st, basically throughout all of September, our local highs and local lows have been steadily rising. And that doesn't look like a downtrend, does it? And at the same time, notice this important level of $110,263. It hasn't been broken. In other words, we've consolidated above it. And that suggests that we might still go higher. Well, higher to where? Well, here's another level. We won't draw it out right now. It's $112,500. And if we break through that, then even 117 comes into play. So, strictly speaking, we should only consider a more reliable short if the daily candle closes below 110,263. Well, that's about it. Because, I want to emphasize, we have an unfilled gap on the Chicago Mercantile Exchange, a very old one, around $116,000. We have an unfilled gap that we have just now formed around $112,000. Because the Chicago Mercantile Exchange closed last Friday at $112,060. And in fact, right now we have a gap on the chart of about $900. So why not expect that the price, the market, will go up and Bitcoin will close these gaps? In other words, we should also consider this scenario. Therefore, a more reliable short would be a close below 110,263 on the daily time frame. Accordingly, according to this markup, the key target is this circled level, $106,133. This level also appeared on the weekly candles, I think, if I'm not mistaken, or on the daily ones. Well, it doesn't really matter. $106,000. And if we break through it, then next, as you can see, is 102,000. And on the monthly chart, we have 101, I think, or maybe it was on the weekly. Well, something like that. And if we look at this whole movement from the perspective of this ascending channel, then we could come here to the middle of the channel, and that's around, I'm pointing with the cursor, $100,000, or here, and that's already $90,000. Fasten your seatbelts and trade carefully. Trade one theory. Hugs and kisses. Leave your comments, hit like, subscribe, and click the bell. See you next time.